Let's talk about something that's, frankly, terrifying. A medical emergency hits, and it's stressful enough, but then the bills start piling up. And if you're a homeowner in California, that stress can morph into one very specific fear. Could I actually lose my house over this? We're going to break down exactly what can, and more importantly, what can't happen. This is it, right? This is the big question that keeps people up at night. So let's not waste any time. Let's get right to the honest answer. And those two words at the end are absolutely crucial. The answer is not right away. So you can take a breath. It is not an immediate threat. But, and this is a big but, it can kick off a kind of chain reaction if the debt just sits there and is ignored for too long. Understanding that process, that's the key to making sure you stay in control. So let's look at this chain reaction. I like to think of it as a debt snowball. You know, a single unpaid bill on its own isn't going to put your home at risk. It's just a little snowball. But if you ignore it, it can start rolling downhill, gathering speed, and getting bigger and bigger. So how does that snowball actually build momentum? Well, it starts pretty simply. The medical bills go unpaid. Eventually, that account gets sent to a collection agency. If that doesn't work, the creditor might decide to file a lawsuit. And if they win that lawsuit, they get something called a court judgment. And that judgment, well, that's the legal tool they need for the final step, placing a lien on your property. Okay, so you hear this term judgment lien, and it sounds pretty intimidating, right? So what is it really? It's basically a legal IOU that gets attached to your property's title after a creditor has won a lawsuit against you. It's not an eviction notice, but it is a debt that absolutely has to be paid off when you go to sell the house or try to refinance it. You know what? This is so important. I'm going to say it again. A lien is not an eviction notice. Nobody is going to show up at your door with a sheriff to force you out of your home because of a medical debt lien. It's better to think of it as a major financial headache, a complication, not a foreclosure order. So if it doesn't kick you out, what's the big deal? Well, the real impact of a lien is that it just sits there like an anchor on your property. It makes it really hard to refinance your mortgage. It definitely complicates things if you decide you want to sell, and all the while that debt can be quietly collecting interest, which just adds to the financial and, let's be honest, the emotional stress of the whole situation. Okay, we've talked about the problem, we've talked about the snowball, but now let's pivot to the good news, and it is seriously good news. California has this incredibly powerful safety net built specifically to protect homeowners, and it's amazing how many people just don't even know it exists. And listen, we're not talking about some minor little loophole here. California has one of the most robust, most powerful homeowner protection systems in the entire country. It's designed for exactly this kind of situation, to keep people in their homes. And here are the numbers behind that shield. It's called the homestead exemption, and you can think of it as your secret weapon. It protects between $300,000 and $600,000 of your home's equity from most creditors. The exact amount depends on your county, but that is a massive, massive amount of protection. So let's boil it all down to the most crucial point. Here it is. If the amount of equity you have in your home, that's what it's worth minus what you owe on the mortgage, is less than that protected amount, a creditor generally cannot force you to sell your home to pay off that medical debt. For a huge number of California homeowners, this protection is an absolute game changer. But, and you knew there was a but coming, that safety net isn't absolute. The risk can become very, very real under certain circumstances. So it's really important to understand where the true danger actually lies. And this really gets to the heart of it. It is almost never the medical debt alone that causes someone to lose their home. The real danger, the real pressure, comes from what we call the stacking of problems. It's when that medical debt is just one of several major financial hardships all happening at the same time. And what do these stacking problems look like? Well, it's a perfect storm, really. You might lose your job because of the very illness that caused the bills. That leads to missing mortgage payments. Now your credit is damaged, so refinancing is off the table. You've maxed out your credit cards trying to cover treatments, and on top of all of that, you get hit with a court judgment and a lien. See, it's this combination that creates a truly high-risk situation. So let's just do a quick reality check and put this all into perspective. When your bills are just in collections, there's really no immediate risk to your home. After a court judgment gets issued, okay, now a lien might follow. Once that lien is officially recorded, selling your house gets more complicated. But the real danger zone, the red flag, is that final stage. When you have a mortgage default combined with a lien, that is when the risk of foreclosure goes way, way up. So now that we know all this,
How do you take back control? This isn't about being a passive victim in all this. It's about understanding you have options, and you can take clear, proactive steps to protect yourself.
First things first, let's just bust a huge myth. So many people think you can't sell a house if there's a lien on it. The reality? It's actually a pretty straightforward process. The title company just pays the lien off from the money from the sale at closing, and you walk away with whatever equity is left over. Honestly, sometimes selling is the smartest possible move to protect your finances and get your peace of mind back. Okay, so what can you do right now, today? Here's a checklist. First, go online and check your county's court records to see if any lawsuits have been filed. Second, check with the county recorder's office to see if a lien has actually been recorded. Next, get a clear, realistic picture of your home's equity. And then, you have to ask yourself the tough, honest question. Is keeping this house actually helping me, or is it hurting my long-term financial stability? I really want to end on this note because it is so important to hear this. Facing overwhelming medical debt does not mean you failed. It doesn't mean you were careless or irresponsible. It means you're navigating a really difficult situation that life just threw at you, something that happens to millions and millions of good, responsible people. So the final question here is really one for you to think about. Right now in your life, is your home a source of security and stability, or has it become a source of constant stress and anxiety? Answering that question, really honestly, is the first and most important step toward finding the right path forward for you.